Savers are losers. So I want to do this video to inspire people and give them the knowledge and understanding about what is going on in today's society. Now, this is a topic that is not talked about. It's neglected. We don't learn about this at school. We don't learn about finances. We don't learn about the financial markets. When I started to learn about this, I was obsessed and something triggered me and I was like, what is happening? It inspired me to take action because I wanted to help my family and not get stuck in the rat race. Now, I'm 28 years old. My family, my parents come from a different, I guess, generation of the industrial age where, it's the working age, get your money, put it in the bank, it's a safe haven. Now, keeping your money in the bank these days is actually probably one of the worst things you can possibly do moving forward if you're actually trying to build wealth. You're actually losing money as you're keeping your money in the bank because inflation is growing faster than what your money is in the bank. So I do this video to inspire people, to educate people. We don't learn about this, like I said. This is not taught in school education. It used to be back in 1901. They removed it. Reason why, I believe, because there's a lot of things involved because they don't want us to know these things or, I guess, keep people at a certain level. Now, that's a topic for another day. But I want to give people an understanding of what's going on. So all this I'm talking about is facts. There's nothing here that I've just made up on the spot. I love this topic. I enjoy talking about this, and I want to express this with you to understand what's going on. So I'm going to talk about the US dollar and go back. So the US dollar is the world-backed currency. Now, 80% of countries in the world trade with the US dollar. So they trade with the US dollar. Now, there's about 15 countries as well that have a swap line, which is another topic for another day, that is connected to the US, which they print money, which Australia is part of it. They're one of those 15 of those countries that print money, and those money, and it's a swap line that goes direct to, I guess, to the United States. Now, like I said, it's a world-backed currency, the US dollar. Now, back in 1971, President Nixon, who was elected at the time in power, removed the gold standard against the US dollar. So the US dollar was pegged before 1971 to the gold standard. So it was pegged to gold. So they had to have a certain amount of gold in their reserves. The banks did, the central banks. And then they could, I guess, create dollars, print money to a certain extent, depending on how much reserves they had of gold in their vaults. Once they removed gold from so that was pegged to gold, to the US dollar. The money was not classified as money anymore. It was classified as fiat currency, and this became credit. So money then had no value, and why it had no value is because from that point on, you could print as much money as you wanted for generations, how it's changed on now. It's just a touch of a button, and they can just print infinity dollars, like we're seeing now. And this is when the evolution of it, I guess, inflation started to really, really ramp up. And I'm going to show you some evidence, some graphs, and information on what's happened, I guess, from 1970 to now. And this is super important to understand because in Australia alone, in the last 18 months, Australia has printed more money than what they have in the last 200 years. So they have printed $500 billion, in the last 18 months, which is ludicrous. Being a country the size we are with the population that we have, it's unbelievable how much money they have printed. And since then, of course, this has been I guess something that's been happening from 1970 to now. It's 1,000 cuts to a death. It's slowly happening, and we're seeing the interest rates drop, and the cash rate at the moment is 0.1%, which we are close to zero. We are close to zero. We were close going to negative, and if we go to negative, it's called hyperinflation. If you don't know what hyperinflation is, maybe look that up. Places like Venezuela, Argentina, Germany, Cuba have gone through this, and Venezuela, of course, they're still going through it, and the dollar has folded, and I guess goods and services have got more value than what the money has. But we're not going into that, I guess that certain inflation period at the moment. But we are on that threshold. And it's very dangerous because if you don't understand money, if you don't know how to use money, I guess what my point is here, the poor will get poorer and the rich will get richer. The middle class has been getting taken out since this has happened. And it all becomes why? Because if you don't understand how to use credit, not money, credit, people will be losing, and I guess will be getting left behind. At the moment, we're seeing the lowest interest rates we've ever seen in history in Australia. And so people, or financial bankers and I guess investors and business owners and all the rest of them are taking advantage of this. And this doesn't get taught at school. Now, this is why I'm doing this video, so people can educate themselves, they can learn, understand, and take action. So since 2020, COVID has hit, the central banks all over the world, their total assets have increased ginormously. If we look at Australia here, this blue line, you just see this spike going straight up to the sky, over 25% of increase of total assets. Now, central banks are worth billions and billions and billions of dollars. A 25% increase, do the maths, that's a lot of money. That's a lot of money. Same goes with all the other countries around the world. Now, as the rich get richer, the poor get poorer, because if the poor do not know how to use money, they get left behind. And I don't say this to put down on the poor or people that are, not in a good financial situation. I'm just trying to educate people. So please get where I'm coming from here. Australian cash rate. From the early 90s to today, you can see that the cash rate has dropped dramatically. I remember when my parents first bought their home back in the 90s, early 90s. Interest rates at one they were paying was 18%. 18% on a home loan. But the cash rate is what reflects, I guess, in a term deposit. If you've got your money in a term deposit in a bank, you're going to accumulate interest on that money. As you can see, back in the day, in the mid-90s, you could accumulate up to 7% if you left your money in the bank. At the moment, you're probably getting less than 1%. You're getting less than 1%. Now, if inflation's at 3% and you're getting less than 1% of money of interest in a term deposit, you're actually losing out. Your money is losing value as it goes on. For you to outdo inflation, you have to outdo it by more than, I guess, 3%. A 1% increase, if you go to 4% of a term deposit, it's still not enough, because goods and services are increasing even more, and which I'll talk on next. Now, that'll be the following slide, but what I'm talking on about now is, as we can see, the Australian Bank, the RBA, the Reserve Bank of Australia, has printed more money in the last 18 months than what they had in the last 200 years. If we look at this line of money that has been just slowly trending sideways, after that 2000 period, we started to see it ramp up. Now, as you can see, we've hit this massive straight line. It's just literally gone up vertical, and money has been released. More money has been released than what there has in the last 200 years, in the last 18 months, which is ludicrous. And some of this money is going to the economy. Some of this money is called QE, quantitative easing, which goes into the financial markets, which is the stock market. And that's why the stock market is on a rally. It's at the highest it's ever been. But we've got the country, half the country's been in lockdown. Sydney, Melbourne, and other states have been in lockdown for so long. But how come the stock market is on a rally? Doesn't make sense. Why? Because QE, they put the money into it's called quantitative easing, trying to hold up the market so that nothing crashes. CPI. So it's Customer Price Index. So what I'm talking about here, this is like an overall, I guess, consumer goods and services purchased by the household. Now, it's an overall goods and services, so it's not an individual product. Now, as we can see, in the last 50 years, it's 13x increased. So goods and services have increased dramatically. And by doing so, your money is losing value if you are not doing nothing with it, because if it's sitting in term deposit, the interest that you are claiming is very little compared to, I guess, the increase of inflation over a certain period. So your dollar, is losing value. Now, this is something to show you, to give you an understanding what is going on at the moment, and it's been happening. Like I said, if we look at the 70s, this is when inflation started to happen. And look at, if you can see this line, it's just literally trending up. There's no peaks and troughs. There's no ups and downs. It's just literally going to the moon. And I think it's going to continue like this moving forward. Now, what has been the scariest thing is Australian wages growth. Since 2008, it has been decreasing. It has been decreasing. So you're actually not making the wage that you should be making to help keep up with inflation. As everything else is rising, your actual wage is not increasing at the same level or the same velocity as, goods and services, as, financial markets. Of course, we can't have it at a certain level of financial markets. Something can, grow 25%. Of course, your wage can't grow 25% in a year, but it's been decreasing. We've seen wages growth decreasing. So your money you're making, I guess you're losing out on inflation. And so I want to do a little bit of a history and go back, in the last 50 years and have a look at, I guess, in 1970, the average wage was $6,000 per annum. Now, back in 1970, the median house price in 1970 in Australia was over $18,000, which was 3 times the average wage to purchase a house. And if we look at 2020, I should say, the average wage is $71,000. It's over $71,000 per annum. If we look in today's, I guess, nationwide, Australia's median house price is $956,000, which is 13.4 times the average. I put a mistake here. I'd say $17,000. It's supposed to be $71,000 per annum of the house value of today. So it's 10x in the last 50 years. The housing prices have 10x, and the wages have not kept up with the housing prices. And so today, if we look at the increase, of course, wages have increased 1,000% in the last 50 years. If we look at property value, prices have increased over 5,000%. You look at that is ginormous. And by how are we going to keep up if wages aren't going to support the financial markets and financial assets and goods and services, commodities, and all sorts of other things that we're purchasing, your food and your cigarettes and all the other things that we go out there and purchase in vehicles and etc. Everything else is increasing, but your wages is not increasing and keeping up with CPI. We're losing out. Second-hand cars in Australia rose 30% during COVID. 30%. How come wages didn't grow up 30%? A Big Mac meal back in 2010 was $5.95. Today, it's $11.95. Big Mac doesn't cost more to make. The bun hasn't got richer. The meat isn't more expensive. But the price of the value of money has lost its value. So you need more dollars to pay for the goods. And this is called inflation. Back in, the 80s, a Big Mac meal, I remember I looked it up, was $2.50. In the 80s, it probably cost you more to make a Big Mac meal because they didn't have the technology. They didn't have the systems that they have in today's world. In I guess you go to Macca's, you got self-serve, you got machines that are cooking the burgers pretty much. They got less staff. The farming, the agriculture was very different in the 80s compared to 2020. There was more labor involved. But the burgers were cheaper back in the 80s compared to today. So inflation is happening dramatically. And so I do this video to inspire and teach people to learn about inflation. When I started learning about this, I was very passionate. And I started learning, I was hooked because I wanted to understand what was going on. Keeping your money in the bank, you're losing. And I got my parents who come from that generation of the industrial age of saving and put your money in the bank, work hard. In today's society, we are losing out on if we're just going to do that, if we're going to follow the philosophy of our parents. It's a different age, different times. And some of the books I want to recommend that, got me to start understanding this and learning about this. I've got Gold and Silver from Robert Kiyosaki, Rich Dad, Poor Dad. Talks about gold and silver, but talks about the history of, I guess, the gold and what the value of gold and silver back in the old days and compared to now and what happened and how the dollar was backed to gold and silver. It gives you a very good understanding. Another book by Rich Dad, Poor Dad, The Conspiracy of the Rich. Really good book as well. These books are very easy to read, very beginner level. So it gives you an understanding about what is happening with today's society, the industrial age, the information age that we're in today. And there's another book, I guess, if you've got a high financial IQ, it's called The Secret Life of Real Estate and Banking. Now, this is a full-on book. If you haven't got a very strong financial IQ at the moment and you want to increase it, I recommend you start with the other books. move on to this other book here that's really talks about, it talks about an 18.6-year property cycle, the booms and troughs, and it's spot on. It talks about, it goes all the way back from 1800s to today, and that book is very powerful because it has information that's not really out there, getting preached, and this is something that doesn't get taught at school, like I said. And I want to inspire people to learn about this, take advantage of you using your money and using it correctly and buying things that are going to help increase in value over time. And so you don't get stuck in the rat race. If we look at superannuation, we look at retirement, when we do retire, majority of Australians 80% of Australians do not have enough money in their super to retire. So they're stuck there working for the rest of their lives. If you take action while you've got the chance to understand, learn about this, understand about this inflation, understand how to put the money to work, you can get out of the rat race, and you can be, someone that is going to have financial security and be well off moving forward in the years to come. Now, if you like this video, please like, subscribe, share this video, or give us feedback. I want to do more videos about this. If people are interested about inflation, understanding about the money system, we'll touch more, and I'll get more in depth, and we'll go talk about more different topics to give you an understanding what's going on. Like I said, this is all facts. These graphs, these charts from Australian Bureau of Statistics, they're from the RBA banks. This is something that everyone has access to. And I just want to teach and educate people so they learn about this. So thank you for watching this video. And like I said, if you like this video and you want more, please comment and let us know so I can create more content behind this.